Alright, today I'll be showing you guys on how to do your risk management while trading. So you have to know how to do your risk to reward ratio. When you are trading, you should know the risk, your total amount you should risk on your account. And with that, when you know the amount you should risk on your account, with that you can know the amount, the loss side to use, the SL to use, and the take profit to use. It's very simple. So I'll not teach you man, and I'll just tell you how where you can go and calculate your 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 risk to reward ratio, how to calculate your risk to reward ratio, the percentage, the amount of money you want to actually what risk. So it is very simple. So first of all, let's visit baby pips. Okay, baby pips is loading. Sorry, network is kind of bad. So baby pips is currently loading. Okay, it has raised. This is a position size calculator. They already have it on their site already. So you just scroll down. This is what you have. This is the currency you want to trade. That is US dollars. You want to trade US dollars, or you want to trade, for example, I want to trade euros. So what is my account balance? It's talking about account size. Imagine my account size is $5,000. Then risk percent. How much do I want to risk? Okay, I want to risk just 10% of the account. So in risking 10% of the account, sorry, I want to risk 10% of the account. So if I should click on calculate right now, go, sorry. Sorry, network is kind of slow currently. Okay, Euro USD. Okay, sorry, US dollar, Euro USD, calculate. Sorry, network is kind of blown. Okay, okay. Sorry. So this USD, so your stop loss. Okay, I want to just use my stop loss should be like maybe 20 pips. I getting it. I click on calculate. So now this is the result. What I'm going to risk is $500 out of $5,000. Okay, position size unit is 250,000. A standard lot size, so I can comfortably use 2.5 lot size, standard lot size to trade, to take this particular trade. So now in using this standard lot size, so maybe at the end of the whole day, I want to like how can I put it? I want to take trade maybe 3 times in a day. So I will now divide. I will divide 2.5 divided by 3. Then you have 0.8. So per entry I'm going to take is 0.8, 0.8, risking 10% of the account. So in a case I don't want to risk 10%, maybe I just want to risk 5% of the account, or I want to risk just 1% of the account. 1% of the account, that is like $50 if I'm not mistaken. If you calculate now, so the total amount you should trade today is just 0.25. I'm risking what, just $50. So since I'm going to risk $50, so for instance, let's say my risk to reward ratio is 1:3. So which means if I take an entry 0.25, so if it should goes my way, I should be making I should be using 1:3. I should be making okay, 1:3. So I should be making, I think, okay, 1:3. So 1 to realize times 3 what I'm supposed to, I should make it like 150 dollars. But if it did not come my way, I'll just lose $50 out of 1,000. Same thing also applicable to a $1,000 account. See $1,000 account, you're risking $10, then you are going with 0.05. If it should go your way, 1:30, that's like you're going to make $30. If it doesn't go your way, you're going to lose just what, $10. So that's how to calculate risk management. That's how to calculate risk. So at the end of the day, you will not just open a trade and just be burning money, burning funds, burning money, burning money, burning money. But this is very simple way for you to analyze your trade. Okay, there are so several of them. There are plenty. Yeah, you can see them here. The you select what you want to trade and do your analysis. After analysis, you set it. Okay, like okay, if I should take at least 1% per trade, which means out of two trades, three trades in a day, if I should succeed in two and I lose one, which means at the end of the day I make $60. I lose one, which means I lose $10. So at the end of the day, I close the market with $50. So if I should lose the trade at the end of the day, that is $30. So $30 for $1,000 is nothing much. You won't feel it. But imagine you risking maybe 20% of your assets. Risking 20% is dangerous. If you risk 20%, your standard loss rate is one. You are just risking $200 from your account, which is very bad. You understand? So that is just it. It's very simple. I always advise you just risk 1%. 1% risk is okay. Don't risk 1% of your total capital. If I have $300 on my account now, any trade I want to take, I'm risking just $3 to make what, $9. I'm risking $3 to make $9. So with 0.015, I know that okay, we have 0.01. So you can't get this decimal. So the only thing you will do here is either you round it up to 0.02, or you increase your risk to just 2%. You calculate 0.03. So if this thing goes your way, you are making what, $18. If it you go to sideways, you're making what, you'll be losing $6. 1:3. We still have 1:1. 1:1 is either you gain $6 and lose $6. 1:2 is lose $6 and gain um $12. So that is just this. So it's very simple. If this is amount you are risking, if it should go your way, multiply it by 3 if it's 1:3, which means you are going to make what, 18. So that is just it. Is very simple. It's not as hard as you think. With this, if you should take an entry and lose $6, you won't feel much pain out of 300. So that is just it. So all this is just to help you to know standard loss size to use. So basically I do use 1k. Is 1k as my standard equity. So per trade I'm risking $20. I'm risking $20, 0.1 loss size, so for one entry it makes 60. Sometimes I decide to use 1% risk, 1% risk, one entry and make $30. So this is how to calculate, how to do your calculate your risk to reward ratio. This is all. It's not hard, it's very simple. So I believe this video did you well. Do make sure to subscribe to our YouTube channel and also make sure to follow us, like, comment, ask questions. I promise we'll give you a good feedback. Thank you very much.